Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, welcome back.
It's a pleasure to be back, Jim.
John, it's been a year since you talked about Skeena Resources, which just released a PEA for its SK Creek project, and the stock is in an uptrend despite gold's recent sloppiness. What's the outlook for Skeena?
Jim, things are finally looking good for Skeena. A year ago when I last talked about it, the company had done what I thought was a really dumb deal on its SNP deposit, which it had acquired from Barrick a few years earlier. It granted Hochschild Mining, the Peruvian producer, an option to option 60% of the SNP project over a 3-year period. In other words, a free lunch with predefined terms that allows Hochschild to earn 60% by spending $22 million over 3 years after it finally decides to earn into the project. And for that, Skeena got $6.7 million in flow-through at 90 cents, which was at a premium to the market. But it pretty well killed the SNP project because obviously why should Skeena spend its own money on the SNP project when it all goes to de-risk it on behalf of Hochschild, which has a free option on fixed terms. So clearly, only a couple thousand meters were drilled this year, and that project kind of is on the sidelines while the attention turned to the SK Creek project, which Skeena had optioned from Barrick in late 2017. Now, under this deal, Skeena has to spend $3.5 million by the end of 2020, which it has already done, and it must make a $10 million payment to Barrick to vest for 100% and fund the estimated $7.7 million in reclamation expenses that Barrick has to carry from the former SK Creek mine. The problem with this deal is that once Skeena vests for 100%, if it has established a resource estimate of 1.5 million ounces gold equivalent or better, Barrick will have a 12-month period to elect to back in for 51% by paying back the $10 million that Skeena paid to own the project and reimbursing 3 times Skeena's expenditures on the SK Creek project. So, in effect, they own 49% because in February, when they put out the resource estimate, they cleared that milestone, that threshold of 1.5 million ounces by a substantial margin. So what's happening now is that the company is focused on infill drilling on the resource, which is an open pittable resource on which the PEA was based, 26 million tons of indicated and inferred running 3.3 grams per ton gold and 78 grams per ton silver. It's focusing on upgrading that to measured and indicated because it's going to get $3 back from Barrick for every $1 that it spends on this a year from now when it has to vest for its 100% interest, and at the same time it's upgrading the project for pre-feasibility study level, and that is all very good in a context of expectations that gold is in the early stages of a major rally. Now the PEA just addresses the open pittable resource, and the original concept was that when Barrick shut the mine down in 2008, they had mined all of the high-grade gold and silver VMS mineralization within the contact mudstone unit and had left behind the more stockwork-type gold-silver mineralization that was in the rhyolite footwall unit underneath the mudstone. And Skeena went in there with the idea, if we do enough drilling to stitch this all together, we may have a resource that's worth developing. And what the PEA does is it says that we have a 6,800 ton per day mining operation with a mill and flotation operation, we can produce a concentrate, and the mineralization is refractory, so they had to deal with the metallurgical issue as what's going to be the cost of recovering any of it. They ended up deciding we are going to send this concentrate to Chinese smelters. They did the studies, and it still works. So the PEA at $1,325 base case price came in after tax at $638 million Canadian, with an internal rate of return of 51%. And that NPV is double the $300 million capex. So this project, as it stands now at the PEA level, looks like it is definitely worth developing. If you apply $1,500 gold, it jumps to $878 million. And of course, if you start plugging in numbers like $2,000 gold, which people like myself are inclined to do, you get even better leverage on the upside. However, the question is, will Barrick back in for 51% a year from now? But even if they do, at 128 million shares fully diluted, that implies a $2.50 a share stock price for Skeena, and it's now in that 60-70 cent range. It's just at the beginning of an uptrend that's tracking the advancement of this project, plus growing enthusiasm that we are in a gold bull market. But that's not the only reason the stock is trending higher. They have been doing exploration drilling in the 21A zone, which is at the southern end of the SK Creek system. The mining was all done at the northern end, from where they yanked out 3.5 million ounces gold and 180 million ounces of silver, at grades of 43 gram per ton gold and 2,200 gram per ton silver. I mean, that was fabulous. It was a world-class deposit. But the PEA grade is only 3.2 grams per ton and gold and 78 grams per ton silver, which is a fraction of what was historically mined. So it is a much lower grade system that they are working on. But in September, they reported that drilling just to the west of the 21A zone at its southern end, they encountered high-grade gold-silver mineralization within what looks like a vent, which would be at the interface between mudstone and the underlying rhyolite unit. This is shallow enough to be potentially included in the open pit scenario. So that's created some excitement that, hey, there may be a high-grade gold left in this system, that the drilling that Barrick did before they gave up on the project somehow missed. So that's going to also get attention during this year-round program that they've got going. It's a winterized camp. They're going to keep drilling right through winter, and they'll focus on seeing how many ounces of gold and silver they can get out of this new vent zone, what they call the western lobe. But in October, they put out another announcement. They had drilled a couple holes into the lower mudstone unit. Now, the way this VMS camp works, you have sort of your rhyolite volcanics spewing all over the place, and then they go quiet, and it's a marine type setting, and sediments piled up building these mudstone units. But there's still these hydrothermal systems coming through this, and that's what builds these VMS mineralization. And then there was some more rhyolite flows, and then another quiet period during which that contact mudstone developed, and that really got saturated with zinc, lead, and gold and silver, and that's what became the famous SK Creek 1 discovery. The lower mudstone unit has gold and silver mineralization in it, and was tracked by Barrick for about 5,000 meters, but it's deeper and it's lower grade, so nothing really was ever done with it. But these two holes that Skeena published, they intersected a much higher gold-silver grade than was historically encountered by Barrick. So the lower mudstone unit may be a lot better than it was initially understood. Maybe where the holes were drilled wasn't really the best part of it. Maybe there is a A part of it were the enrichment that we saw in the contact mudstone at the northern part of the SK Creek property also took place. The company's not going to spend really any near-term effort on that, because if they suddenly tag into a really nice big pie of this high-grade mineralization, well, at relatively low cost, they give Barrick lots of good reasons to back in for 51%. So they will let this sit there, but it's a potential down the road that there is a mudstone-hosted potential left at SK Creek that remains to be quantified.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, just following your statement, does any of this have implications for SK Mining and its hunt for SK Creek 2 at its quarry property to the south?
SK Mining was a bottom fish pick of mine for which I had very high hopes starting in 2017 when SSR Mining, then called Silver Standard, did a strong deal where it was going to earn 60% by spending $12 million on the SIB Lulu claims, which are the northern part of the whole property package, which is shared 80-20 with Kirkland Lake Gold. And the southern part, what they call the quarry, that's 100% SK Mining. Now, the driving force behind this farm-in deal by SSR was Carl Edmonds, along with his associate David Gale. Carl had been involved with the exploration work at the SK Creek project before Barrick eventually shelved any further work. And he was pretty convinced that in the vicinity of the old Lulu intersection, there was an enriched mudstone unit to be found. And Quentin Henney had looked at this project on behalf of Mac Balcom some years ago and had said, all this historical drilling that's been done in this area has always been from the surface, drilling through the basalt, the younger basalt cover, and but the stratigraphy is actually sort of tilted somewhat on its side, and you're trying to vertically spear the mudstone unit, which has been displaced by the Coulter fault, thrust fault. You're trying to spear this blindly. And the trick was to step off to the west into the Bowser sediments and drill some angle holes underneath the thrust fault and properly map the stratigraphy and see where the hell this mudstone unit is from which that Lulu zone was detached. Now, Lulu zone was discovered during the original SK Creek discovery play when Silver Butte and another company had this property just to the south of the one that Calpine and Skeena had, and it intersected high grade gold and silver, similar to what was seen in the at SK Creek, except minus the base metals that were part of the SK Creek system. But the source of it was never ever found out, and this has been a puzzle for that property for decades. But SSR went in there and over 2 years spent $8 million carefully following roughly a similar strategy that Quentin Henney had outlined. And apart from a 1 meter snippet of high grade, failed to find anything that could be seen as, well, this is from what that Lulu segment came from. And while Carl and wanted to continue work on this project, spend another 4 million years after building all this geological context so that he could really start to vector. The upstairs people at SSR decided, okay, enough is enough. They pulled the plug, and Mac Balcom got the property back 80% after $8 million of work was spent by another partner. So that, of course, didn't do anything for the stock. The stock sank below 10 cents. He tried to do a deal with Kirkland Lake earlier this year, which has 20% of the Siblulu claims, but didn't make any headway. So SK Mining's been a frustrating bottom fish because it basically had to tread water this year. This has been a horrible year for the resource junior sector, and it didn't look very good until in September. Mac recruited Quinton Henney to become a technical advisor for the project, and Quinton has spent time on this, and he embraced this with great enthusiasm, and he brought a couple of pals from his from the Colorado School of Mines into the equation. They are Thomas Monarchy and John D. Deckard. They are VMS experts, and they are now in there compiling all the data, thinking it all through, and preparing for a program in 2020 that will take a fresh look at the Siblulu combined quarry property. And Mac also recruited the Red Cloud Group to help him try to get a financing. No more of this farm-out business. And they just put together a webinar in which Quinton Henney explains the geological context and why he thinks this SK Mining's property is a really fantastic place to spend exploration dollars and come up with SK Creek too. And he points out that much of the property is covered by this younger basalt that is the hanging wall for the mudstone units that soaked up all that gold-silver mineralization. And the exploration that has been done has been sporadic. It's been focused where there's some outcropping of something interesting, and there's a number of zones such as the Jeff zone and the Tet zone, which has intriguing evidence that something big was going on. And he figures that, well, the chargeability anomalies are what you need to look for. The host stratigraphy that you're seeking is going to be shallow enough that geophysical techniques may light it up. And so there's groundwork now underway to take a fresh look at this project with 100% ownership by SK Mining. And the stock's crept up to 14 cents. We are, of course, in the Golden Triangle is heading into the winter shutdown, where only like fully winterized camps such as that of Skeena can continue doing work. So the market has been slow to respond to this, but with this new set of eyes looking at this project, with the company committing to do it on a 100% funded basis rather than farmed out to some bigger companies whose decisions are not exactly geared towards the interests of a junior, and whose disclosures consist of these quarterly reports that don't really say an awful lot. It looks like SK Mining is finally getting out of the dumpster and back on track, and discovering that this lower mudstone unit is something interesting that should have been followed up in closer detail. Well, this lower mudstone unit's also going to exist in the southern part of this belt, and even finding that vent, the west lobe of the 21A zone, that shows that even when an enormous amount of money has been put into exploring this particular belt, there's still good stuff to be found. And the Corey project has seen, although it's had a lot of exploration done in the past, it's been sort of on a hit and miss, not really focused basis. Now it's being tackled from a big data science perspective, and I'm optimistic that 2020 will be the year that SK Mining moves a lot closer to finding SK Creek 2.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, is there any news from Forum Energy Metals for its Janice Lake project in northern Saskatchewan?
Forum Energy has been releasing assays since late September when Rio Tinto completed a 21-hole drill program on 3 target areas, which have been the focus of past exploration drilling, about 45 holes put into this. This is a sediment-hosted copper-silver system. It's very similar to the Udokan deposit in Russia. This is a 3 billion ton deposit of 1% copper and a pretty good silver grade. In the case of Udokan, it's a intact basin that's still horizontal the way it was when it's formed, but it's got an enormous mountain on it. It is being developed by a Russian company. The geology here in northern Saskatchewan is very similar, except it's been tilted on the side. And in the immediate Janice Lake area where Rio Tinto has focused its drilling activity this summer, these beds are on their side and can conceivably be open pit mines. So you have a lower cost structure than you would in Russia, where they have a higher grade. Now, what's interesting about the Janice Lake project is that the segment where Rio Tinto has been doing its drilling, it's only about 5-6 kilometers of a 52-kilometer belt, all of which Forum Energy owns. It staked this. It expanded it when it did the Rio Tinto deal earlier this year, and this deal allows Rio Tinto to earn up to 80% by spending $30 million. But it had a $3 million firm commitment for the first 18 months. Now, it appears that most of that $3 million, if not all, has already been spent in the first 6 months of this option agreement. So what the market's been hung up on is, is Rio Tinto going to spend next year twiddling its thumbs and waiting until it has to start spending money again in 2021? Is this little junior going to have nothing happening to it? And the results so far have been a mishmash. The horizons are generally less than 1% copper. It would be exciting if we started getting intersections in the 1 to 2% copper range with a good silver kicker. And if you just looked at the results that have been coming out in batches, you would think, well, why are the upstairs people at Rio Tinto going to be aggressive heading into 2020? The decision is expected to be made in early December. The assays are going to, for the rest of the holes, are going to be dribbling out between now and the end of November. So the stock's been kind of languishing, figuring, we don't see the results that should get Rio Tinto excited. Except Rio Tinto took this on as a district play. And it also is taking sort of a big data science approach. It has flown a geophysical survey over the entire property on 100-meter line spacing because these horizons, they have a magnetic signature. And the drilling that they're doing this year many of the holes simply repeat what was done by past operators. It's basically building an interpretive framework which allows Rio Tinto to think about the entire 52-kilometer belt of this basin stratigraphy tilted on its side. And so if they are sticking with their original game plan, the first year was simply a data context building operation with no expectation of anything better. I mean, you have to assume that the previous groups like Noranda and Phelps Dodge did a pretty good job of figuring out whether there was anything fantastic in the immediate area where these horizons outcropped and became the focus of past exploration. But nobody really spent any effort on the entire trend where it's blind, where there isn't something sticking out of the ground to focus the attention. And the thinking of Rio Tinto is that while this may not be the most fantastic grade that we would like, maybe anywhere along this 52-kilometer trend, there is a 6-kilometer segment similar to Udokan itself where the grade does get substantially higher. So the market's been kind of waiting to hear that the upstairs people agree with the exploration team at Rio Tinto and say, yes, proceed next year. And there have been rumors coming out of La Ronge, which is not that far from the project, that permitting is underway for a winter road. And this would be about a 60, 70-kilometer winter road spur from the 905 highway that services the Rabbit Lake uranium operation. And it would have to be built sort of in January and would be open from January to March. And it would enable Rio Tinto to bring in a very large camp and lots of fuel. And of course, since you don't want to spend the money on rebuilding that road a year later, a big question everybody will ask is like, how much fuel in that are they going to bring into this camp if they do build this road? So the market's now waiting for confirmation that this is reality, that Rio Tinto is digging in for a multi-year exploration program. And of course, Forum Energy only ends up with a 20% net interest at the end of the day, but Rio Tinto is looking for a world-class discovery on this play, and with $30 million to spend before it vests for 80%, that's a very good situation for Foreign Energy. It also got a bit of a shot in the arm a couple of days ago when it was able to farm out its Fur Island uranium project to Orano, which is the new name for Areva, the French nuclear energy company. Orano can earn 70% by spending $6 million over 6 years. The uranium sector is absolutely dead. It continues to be below $25 a pound. The discovery hole in the Athabasca Basin, something like a MacArthur River, nobody would really care, because MacArthur itself is suspended right now because Cameco can't make money at $25 a pound. It is better off simply buying it in the spot market from utilities, German and Japanese utilities that don't need their inventory anymore, and fulfilling its long-term commitments in that way. And the other project that Forum Energy has got going is the Love Lake project, which is to the northeast of the Janice Lake project, also in northern Saskatchewan. And this is a nickel, copper, platinum group metals play. And they've got Larry Halbert in there also, an academic geoscientist, doing a complete compilation of all the work that's been done there. And this could turn out to be quite interesting. On the one hand, they're looking for another disseminated lactazils, platinum palladium deposit, but they're also thinking this might have potential for something similar to Voisey's Bay, which is a more traditional magmatic segregation story where you have the sulfides settling into these depressions and forming massive sulfide deposits. And they're also thinking that this Love Lake Pluton is intact. It has not been tectonically disturbed, moved around, and made very complicated. And if this is the case, and it's had sufficient erosion to bring these puddles of massive sulfide within reach of geophysical techniques. This could end up being an interesting story for Forum Energy next year in 2020. And of course, if at the current 6 cents price, it's not a good idea to try and raise a lot of money to be aggressive about Love Lake. But if the Janice Lake project starts to get traction in the eyes of the market by Rio Tinto becoming very aggressive about it, then you would expect a higher stock price, and then they could raise additional funds to be more aggressive about the Love Lake project with its nickel, copper, VMS or massive sulfide potential, and the platinum palladium potential. And palladium prices are still sky high, and there's no telling when that will come down. So it's looking very good for Forum Energy, and we'll know probably in a month whether it's game on for the Janice Lake project.
John, thanks for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.